Hello everyone, welcome once again to another short video. There's been quite a bit of demand from a lot of you guys to talk about some alternative strategies and some alternative things that we can do, or launch some alternative strategies apart from Nifty and Bank Nifty strategies. Of course, that's an option that we have, but some of the segments are such that require some more understanding and some more liquidity. So here is one segment, crude oil options. They have been gaining a lot of interest from traders, as well as there's been an increase in liquidity. And but at the same time, that liquidity increase has come along with the huge slippages that are there as well. So we were trying to, educate some of you guys how you can start trading it, and we wanted to do it, for free as a complementary strategy rather than creating something out of it, because it's a very simple strategy. Anyone can use it. Till the time we have decent, don't have decent amount of liquidity. Full automation is something that we would not recommend, and again, everyone is free to see if it is for them. They would want to code something like this. We'll help you out in this video to code something like this. At StrategyOne, we also always try and help you guys to get an understanding of things, how they work, how you can become better systematic traders. So, without further delay, let me talk about the crude oil options and why they are good. So, as on today, we're talking about November of 2022. The liquidity on crude oil options has improved quite a bit, especially on the hundreds and hundred strikes in the current month. However, bid-ask spread uh, is high. Even on ATM options, it can be 2 to 3 rupees, because when you talk about 100 strikes, the price moves, rupee by rupee, but the options are in 100. 50 options are not, that liquid. When we move to the option chain, you will, understand more about it. And because the spread is high, the slippage can also be high. Hence, the scalability for algos is not there as yet. But the returns, decent returns are possible. We are looking for some small returns every day. That is something that is possible here. So we are trying to educate you in how you can have some semi-automatic strategies, custom strategies that could work uh, in this kind of a situation. We will go to the option chain. So if you talk about you look into this option chain, this is from MCX. It is refreshed. It has to be refreshed right now. So this is the ATM option. As you can see, the 7300 strike, which is a 100 strike. This has got good amount of volume. So 9,700 lots have been traded, 9,500 have been traded. The total OI is around 2,200 by this time, which is still, we are still not in the peak time, because generally MCX gets more liquidity when the US markets are open. So even despite that, we've got 5x the volume of open interest, which is quite good. And by end of the day, it probably will be 10x to 15x. That's how volumes are there. Even some slight OTM options, you can see there the volumes are quite good, and that's also possible if there's a movement that has happened during the day. But overall, there is liquidity even in OTM options. But the bigger issue is the bid-ask spread. It's right now seems to be okay, 1 to 2 rupees here, or here it is again 1 to 2 rupees, but it can become actually quite a lot. So that's something that we need to be careful about, and that is the reason why we suggest that it should be basically a 1 rupee spread on something like call is about this is about 1.6, this is about 1.3. So about 230 rupees is something that we can have as a slippage. So you can imagine, if there's a slight delay, then that can even be even more. So that's the reason why the algos are not really something that will work here, but a semi-automated system, or I would rather put it this way: Algos, like mass algos, will not work here. Public algos will not work here. We'll have to do some sort of a semi-automation here, and that is what I'm trying to help you guys out with. You can again see, again it is refreshed to 1807. The bid ask is again 1 rupee here, 1 rupees 30 paisa here. So this constant difference would always be there, and that's why it needs to have some sort of a thing. So what are we suggesting here is you can choose your own custom time frame. You can choose your own target. We recommend something between 1500 to 2500 rupees per multiplier, which is zero point 0.3 to zero point 0.05 or zero point 0.04, depending upon the margins that are taken. Around 5 lakh rupees or 550 is the margin that is taken for the straddle. Have the same as your SL to have the same risk reward ratio. You have to watch the deployment. You can't leave it unattended. Uh, and paired strategies will work better because they will not go naked, so they are safer. They are safest or safer. Or if you do one thing, and crude or natural gas or any of these commodities, they are very, very volatile. So you don't want to have a situation where you are naked, and you don't have a thing to hedge yourself against. uh, Only trade in current month options, as next month options are not liquid. Also, we are sharing a template to do a basic code, and you can copy that code, run it on TradeTron for your own thing. Again, you choose your custom time. That is very important, and choose your own target. That is what will make it work for you, nothing else. So I'll just go to quickly go to this strategy that I have on TradeTron. The link will be there along with the video. So basically, this is like a custom strategy. So the idea is to get in between these time frames after the market opens for. Let me just zoom it a little bit. So after the market closes for NSE, we try and do this for MCX. You can always, this time will always be the same. But main thing is that MCX option expiry, we are doing, one day before the expiry, not on the expiry day, right? Because again, on that day, the margins could be more, and we don't want to have that situation where you end up carrying that position to next day, even if in case of error. And this is a code basically. Uh, Again, we are trying to get that expiry sorted, and then there is a call and put basically sold at the same time. And this is the exit code. So we are either exiting at 2000 rupees, 2500 rupees profit, or 2500 rupees loss. LTP has to be greater than traded instrument price, which is basically the entry price of crude, of the first thing, of the put. And again, same thing. So what basically says is it will roll if any of the stop losses are hit. This is wide enough actually. Most of the times it will not roll, but you can always change it for yourself. If you want to have 15%, if you want to have 20%, there's something for you to do. Unfortunately, there's no backtest of this on TradeTron. You can use other platforms if you want to do the backtesting. This is a smaller, price execution setting. I think this is something which will work well. This is a trailing stop loss. You can always change it as well. This is your reactivation time. This is your capital. This is your, when it should take a trade. Now, ideally, again, as I said, okay, this is something that you can always change. These are the, settings that I have put up. Uh, this is a basic strategy. So it will not exit, one leg. It will exit both the legs. But we recommend you to monitor your broker deployment as well, because at times the liquidity is such that your bid ask spread is not met. So that's something that you could work out. I would recommend you to have a different time here. You can add other indicators as well in your case to restrict it, uh, and have some other things to calculate in. You can do another custom time and whatnot. There are many options that you have on this, to be fair, and some other indicators if you want to add. I'm not here to teach you indicators, and that's not the objective of this. Objective is to just share this basic strategy to you, so that you can actually make something out of it. Yeah, and one more thing that I request you to look into this exit time. It should not exit later than 2300. because then the beta spread, in my experience, starts increasing. So that's something that you could do. The link would be available at the end of this video, or basically at the along with the description, and you can always choose it. Do remember, this is quite risky. This is crude oil, MCX. I mean, I don't need to talk about how uh, what is the risk profile with these things. These things move 5 to 10% in a day as well. So there could be a lot of movement here. So always do understand that and make sure that you are aware of this thing. I ideally recommend you to activate it when you see the market is quiet. All of us are looking into charts, and if you don't understand charts, I don't expect you to run this strategy. You should run it only when you understand charts. When the market is quiet, use any indicator that you have, any momentum indicator, any range indicator, whatever you want to use. You can check on that and make sure that it is quiet and this is running. It could add a few a bit of money into your let's say returns that you can get on a daily basis from these different sources as well. And I'm sure this will add some value to you. Again, thanks a lot for listening to us. I hope this really helps, and we'll keep on bringing some information like this. Thank you. Have a good day.